Hi guys, welcome once again to my channel. I am Dynamite and this is Dynamite FX. So basically the main aim of every trader is to make money trading the forex market or whatever instruments, financial instrument there is, either the crypto currency or the foreign currencies or synthetic indices or whatever it is. Every trader wants to know how to get into a trend, how to be a part of a trend, or how to know when the market is actually going to reverse its trend. Because having to know those informations gives you an edge in the market, okay? Helps you to know when to buy, when to sell. So in this video today, I'm going to be sharing with us something I consider so much in my trading career, and that is the divergence, okay? And please, if you're new to my channel, you haven't subscribed yet, please do well to subscribe, hit the notification bell so you get notified whenever I upload contents like this, okay? It's going to really help you. So in this video, actually, I want to show you how to, just in case you are new to trading and you do not know how to, you do not know how, when the market is going to reverse, you don't know when to buy and when to sell. So this video is for you. You know, my students in mentorship, one of them asked me, said, Dynamite, how exactly can I know when the market is reversing, when to buy and when to sell? And so that made me to put this video together, okay, to help as many persons as well. So the basic reason why you're in the market is because you want to buy, you want to sell, okay? We didn't come here for sightseeing and all of that. We came to make money. So in order for you to know when to buy and when to sell using the divergence, which I'm going to show you now, you will need technical indicators, because what makes it divergence is that it was spotted with a combination of price action and the information derived from the technical indicators, okay? So right now I'm going to be choosing, there are different indicators you can use to spot divergence, okay, to read the market, to read divergence in the market. So when we go to the list, you're going to click on this F right here. I'm going to click on F and search for technical indicators to help us with this video. So right here we have trend indicators, we have oscillators, we have volumes indicators, Bill Williams indicators, but we're not going to be going through all of that. There are different indicators to use here, and in my next video I'll be showing you how to use these different indicators I'll be selecting, okay, for divergences, okay. So the major indicators I usually use come from the oscillators and the trend indicators, okay. So you can actually use the oscillators, especially because they read the market, they show you what is actually happening in the market. So you have oscillators like the MACD, okay. If you stayed longer on my channel, you will know how much I love to use this indicator. And another indicator I love to use is the relative strength index. Another one I love to use is the stochastic. So there are other ones you can use, okay, the CCI indicator, index, and all of that. They are all very useful and helps to spot divergences in the market. But for the purpose of this very video, I'll be making do with the stochastic indicator for now. Then in my next video, I will show you how to use other indicators to spot divergences and how to actually use them. So we are going to pick the oscillators right now. So I'll select that. So we're going to use the settings, okay, to spot divergence. We're going to use the 20, 5, and 3. You could also use the 5, 3, 3. But for this video, I am using the 20, 5, and 3. So that's done. Okay, so the settings, we'll have to change the color so I'm going to use the signal. I'm going to have to change this color, something we can see. Okay, so that's it. Any color of your choice, you can use it, guys. And please, personally, I do not like to use the 2 lines, okay? But you have to understand that one of these lines on the stochastic is the signal line and one of it is the main line. So while this main line approaches a certain zone, the signal line crosses it to give us the signal we need. So we're going to change these parameters. We're going to change this to 1, change this to 3. Okay, done. But I guess you can see what I'm showing you. So whenever price approaches a certain zone, the signal line has to cross to give you a reason to enter. Now it got to this point and then it crossed, and this was supposed to be an entry, okay? So every time it gets to a certain point and crosses, that's the signal. But in this video, I don't want to use that. I just want to use one of the lines. So I'm going to have to take off one of these lines. I'm going to take off any of it, either the signal or the main. So let me use the signal for this, the signal line for this. I'm going to have to change this to a plain, to the color of my background, so that it doesn't show up anymore. Done. So okay, we're right here now. So looking at this chart, we are going to start having our information on possible divergences spotted. And one thing you should know also is that we have two basic divergences in the market, and we have the daily, sorry guys, we have the regular divergence and we have the hidden divergence. So in my word, I call the regular divergence, I call it the trend, the counter trend, like counter trend divergence, in the sense that it is counter trend because, let's say, price is doing a lower low and a lower high, lower low, lower high, which is actually the component of a downtrend, okay? Lower low, lower high, lower lows, lower high, lower lows, lower high. And instead of, while on your charts you have this happening on the main chart, you see that the indicator is rather giving this other information. You see this. So this information we have here is what we call divergence, because price is actually going opposite direction. Price is going a certain direction and the indicator is indicating an opposite direction. That is what divergence means. Okay, so now while we have price doing a lower low and lower high, and you begin to see that the indicator at some point is beginning to give you a different information, you know that price is about to change direction. So that change in the actual direction of the trend is what I call the counter trend. The counter trend, okay? That's what I call the counter, because price is actually, for example, trending downwards and you see the indicator trending upwards. So this is the counter trend divergence for me. Okay, then let's say price, then for the for trend divergence, okay, I call that the hidden divergence in a trend, in the sense that price is actually on an uptrend already. Price is actually on an uptrend, for example, and then you get to see a divergence confirming the continuation of that trend. Let's say you had price going up, and then you get to see a divergence that confirms that price is going to continue to go up again. That's what I call the trend divergence or the hidden divergence. So quickly, you're not going to understand all of that I've just said until I begin to show you. We begin to do the markups on our chart. So let's start marking up. Let's start spotting this divergences using the Crash 1000 index. Okay, it's applicable in every other instrument, but of course I'm going to use just this very instrument, okay, to spot out divergences. So right here I have price moving this direction upwards. Okay, as you can see right here, price is moving, was actually shooting up, and while right here you can see that price was staying this way. Okay, that is one of it. And I'm going to use another color here and I'll tell you why later. Price was doing this. Let me change this color to let me use the red. Okay, so that is done. Yeah, so price was actually doing this and divergence was giving us this movement upward on the stochastic. Okay, let's mark them, and we are going to get right into explaining the different types of divergences. So this video is going to be a little bit long, but of course this is not a strategy video. This is an educative, this is a video. This is actually something that we'll have to explain. I will have to explain to you guys for the benefit of those who are new to trading. Okay, this information will help. So I have to do this. So what was that color again? Let's use the blue. So this will have to be the blue as well. Okay, so in order not to waste so much time on this chart, okay, we can see that price was moving a certain direction, okay, going up and coming down, okay, and the stochastic was giving us a different information. So in this scenario, guys, let's look at this scenario. And there is something else I like to do. I like to trade with the moving averages as well. It kind of makes the whole thing, the sites on my chart, very easy. It makes me know when market is trending downwards or so. Mere looking at this with your eyes as well, even without using moving average, you can know that market is doing it, is going a certain direction. This is a downward movement, so you don't even need indicators to, you know, tell you that price is trending downwards. Okay, and whenever price is going upwards, you don't have to you don't need to be told. Just seeing price going upward, you know that price is actually trending upward. So right here, let me use this very chart now to spot out divergence. Now price is already trending upward. Let me start with the trend divergence. Price is trending downwards, guys, and what do we see here? Right here on this chart, we see that the stochastic indicator gave us this at this point. These are the points I have just noted right there. What do you see right here? While the stochastic was giving us a downwards movement here, when it got to this point, price was giving us another movement up here. This is what I call the trend continuation divergence. That's because the trend is going to continue. So this is a bullish market, and then you're having a bullish divergence. So this is a divergence confirming the trend. This is a divergence informing you that the trend is going to continue. Guys, take note. Now let's look for another divergence. So right here in this information, we have two informations on this chart depending on the time frame we're looking at. So basically, this is basically looking at this chart, we have a downtrend because price has been trending downwards, okay, and coming down. So this is a downtrend actually, and then price came to this point trending downwards, and what do you see? It gave us an information here. It gave us an information here. This is a counter direction. Price heading down, price heading indicator heading up. This is what I call the regular divergence. Reasons being that price is actually trending downwards and indicator is indicating upwards. Now, this original trend is a downtrend. This is a downtrend. This is a sell trend. And then we have to have a bullish divergence, indicating that there's going to be a change in direction against the trend. This is what I call the counter trend divergence, and this is what we call the regular divergence, okay? But in this same chart, like I said, I'm going to show you two things right here. I have just finished showing you a regular divergence, okay? A regular in the sense that price changed the course of the real trend with this information right here. Now, let's revisit the trend continuation divergence. So this very chart we have has given us the two informations we need. Now price has pulled back to the trend direction that was already in vogue. And then how do you know that price is going to return? Look at, we have another information here. Okay, I believe you can see what I'm indicating right here. Price gave us an information here that, hey, this market is actually, this trend is going to continue. And this was the info. This is where the information is, the second leg. Without the second leg, we wouldn't have known there's a divergence, by the way. And to further confirm this, you can also spot that this divergence took place at the previous zone, a previous support now turning into a resistance. So guys, this is how to actually spot divergence in the market. This is how to understand when the market, when price is actually going a certain direction, when price is going to return, it's going to reverse, and when price is going to continue a trend. So let's go a little bit further. I really don't want to take this video long. So I would like us to look out for other very obvious divergences, very obvious ones. So right here, we have another obvious change in direction here, where price was trending downward, and then you see that the stochastic was going upward. Take notes. Look at the crosshair. This is the very point this is happening. This is the very point right here. So originally, price was coming down. As you can see from behind, price has been trending downwards. At least for now, price was trending downwards, and boom, price reversed. Why? Because there was an information here telling us that price will reverse. And now, this is what we call the counter trend or the regular divergence. So guys, when you begin to see informations like this is why I like to use technical indicators as well, because using a naked chart, okay, you will not have this information. You could be trading blindly. So sometimes when I hear some traders say trading with indicators is bad or is a sign of inexperience, I think they are wrong, because most of the time, looking at the chart, the naked chart, sometimes there's certain information you will never get. But when you combine technical indicators as a technical analyst anyway, you will know that technical indicators can really help your trading career if you can use it properly. So another way to use in the divergence, right now you see that an information has been given that price is reversing for the moment. Now please take notes, okay? Please take notes. Just note this, okay, that for the fact that you see a divergence does not mean that price is going to reverse immediately. Sometimes the reversal might just be for a short period of time. It might not really go far. But as long as there's a divergence, there's going to be a change in direction for a while. Please take note of that. Some of you think that when you see divergence, it means it's going to change the direction completely. No. I'm going to show you instances where divergences happened, but it really did not change the direction so soon. Now, how do you factor in trading with the information gotten? Let's say you spot a divergence and you're not sure it's going to go far just yet. Look out for zones like this and wait for a retest of price around those zones. Now, what do we have here? You can see that price came to this zone and retested the previous zone. This is the previous zone right here. Okay, this very zone. And price broke out after giving you the information that price is changing direction. And you see that price broke out of this place and retested this zone and continued going up. This is how to factor in these trading decisions, okay? So guys, we can go on and on checking all of this, but in order to keep this video quite short, I'm going to stop right here, okay? And guys, if you haven't subscribed, please do well to subscribe, okay? Because I'm going to be releasing other content soon to help your trading career. I'm going to show you other ways to spot divergences using the RSI indicators, using the MACD indicator, which is my major trading, okay? That's my major trading indicator for obvious reasons. It gives me a clearer view of the market, even better than the stochastic does. So if you've been following my channel for a while, you know that I like to talk about the MACD indicators always, because it gives me a lot of information I want to use in my trading career as well. So for now, guys, this is the end of this video. Please do well to subscribe, do well to hit the notification button, do well to share this video. Please do not forget to like. Okay, do not forget to like this. Okay, before I go over, I was going to say I like to use the moving averages as well to show trend direction. So if understanding the trend gives you a hard time, you can just decide to use a moving average. Okay, go to your chart, pick the moving average and select the period you want to use. You can decide to use the 200 period moving average, because the 200 period moving average, especially on a 1 hour trend, shows you the real trend in the bigger time frames. Okay, so this is it. Price trending downwards. When price is trending downwards, you get to know that it is a sell trend. When price is breaking in between the moving average, is intersecting the moving average, you get to know that it is a range. You see this? We don't want to be in this kind of market, because you will not know what to do. So you see why I love to use the moving average, because it gives me the information I need so clearly and very quick. So guys, if you look at the 1 hour time frame, you can see that the information are so clear. It gives you a clue of how to factor in what I have just taught you right now. Okay, trying to catch divergences for continuation. This is coming down and this was going up, so this happens to be the continuation of this trend upwards, and you can see that. Okay, every time this happens, it is showing you that price is going to continue, and then you have to make good use of your eyes, your sight, to be able to spot these things. Okay, sometimes we also have some indicators that do that, but I basically don't use custom indicators for this. Any other custom indicators, I just use my eyes to know when market is actually going to be reversing or not. It's very clear. You don't need any indicator to indicate the divergences. Okay, you can see this. It's very, very clear. You just have to use your eyes to spot them. So guys, that is it. And looking at the recent chart, this was how I was able to predict this market movement, buy and sell. If you haven't seen this, you go to my Telegram channel, you will see when I sent this analysis of a buy and a sell. And like talking about divergence here, and divergence, you know, whenever you spot divergence, it might not go very far. This is an example of such. When this divergence was spotted, okay, on the bigger time frame, it only went this far. It just went back to touch the next moving average around. So that was a short-term divergence spotted. Okay, it didn't go far. So this is the first time price is breaking out of the crash 1000 index trend on H1. Okay, I haven't spotted this divergence. So if you're following me on Telegram, okay, you would have seen when I gave the first signal, the second signal, the next signal, and the target has been met already. So I use this, I factor this in to my trading a lot. Okay guys, so this is all for now. Please do well to subscribe, do well to hit, please do well to like this video. Please help like this video if it actually helped you, so that the YouTube algorithm can recommend this channel and this video to as many people as possible. So guys, thanks for now, and that is the end of this video. Thanks. See you in my next video.